What's up guys, I'm Alex and I've just joined the Phantom team. So I do want to give a shout out to Brad, Phantom and the rest of the team for having me on. So thank you guys. So I thought I'd start by getting a video out for the community because we all trade the same concepts, right? But we all trade them maybe in a slightly different way or with a different perspective or way of looking at things. And so that's why it's so interesting, hearing slightly different viewpoints from different voices, different thoughts on the charts from different people, and then it's up to us to take what we need and discard the rest. Because at the end of the day, our trading plans should be personal to us and should be something that we're comfy with, that we're confident to trade. You don't want to be thinking, well, would he get in this? Would she get in that? Would he get in this? You want to be thinking, like, the real question is, would you get in that? Like, would you get in that? Does it meet your criteria? Is it in your trading plan? Like, it doesn't matter what anyone else is doing. You want to be at a point where there's no hesitation. You see a trade set up that's in your plan and you execute. Like, obviously emotions do come in. Like, we're not robots and it's not going to completely go away. But having that really personalized trading plan will go a long way. It'll help massively. So yeah, no, I don't know why I'm rambling, but today's video is basically on understanding higher time frame intentions, and I'm also going to go over supply and demand breaks, and I'm going to do it on EU today, because most people seem to trade EU, even though GU for me is a better pair or a nicer pair, but I'll say that for another day. So yeah, let's go. On the 4 hour. Alright, we'll zoom out a little bit. So in simple terms, just to start with, we've got higher high, higher low, higher high. Not confirmed yet as a higher low, but so far we didn't break the higher low. We respected it and we pushed away. So we could assume that this would take out this high and then this would be our higher low, right? And we're going to look for a higher high somewhere up here. And so if we just zoom in a little bit so we see the 4 hour a bit clearer. On the 4 hour chart, we've got higher high, higher low, higher high, higher low, and we get to this point. And so what do you notice about each swing point? Typically, you'll get a sharp, aggressive move away. Like you've had a sharp move down, sharp move up, sharp move down, sharp move up. And then we've come to this point here where it's failed to break down, it's failed to break up, it's failed to break down, and then eventually it's broken up. So we've built up a lot of liquidity here, which we've now swept. It's at the top side, but we've still got all this resting below here. And so this, I won't consider this a swing point. Like, it's not moved away aggressively, it's corrected sideways, built liquidity, now we've swept liquidity. And so this is looking a lot more like what you could assume would be a swing point. It's swept liquidity and it's moved away aggressively. And so what would we expect next? We'd expect, if this is our higher high, we'd expect a higher low in the market, right? And we'd assume that the market would want to take all this liquidity to fuel the move. So if I just draw this on, you'd expect this leg down, obviously not breaking this low, forming a higher low somewhere underneath this liquidity, and then going on to break the high, and we continue with the bullish trend, which would then eventually take out this high for the daily trend, and so on. Now, of course, we don't want to predict too much or like over forecast what we think what we think is going to happen in the markets, because obviously the market does what it wants, right? And we just have to react. But what we can do is use our time frames. So if we jump down, delete this a minute. If we jump down now to an intraday time frame, 15-minute, and see what's really going on. As you can see now clearly, we've swapped liquidity here, we've come up, we've pushed down, come back up, we've failed to break this high, so we've respected this high, and we've continued downwards, right? So if I actually mark on the the intraday swing points, just so it's clear where we are. So these are the higher highs and higher lows. And then here we get the bearish switch. Not that one, but you know what I mean. With a lower low, this fails to break this, so this isn't confirmed, and then we push up, and then this does break. So this is the lower high, the lower low, lower high, lower low, lower high, lower low, and then we get a switch back. Not there, but you know what I mean. Higher high, higher low, higher high, and then we get the lower low. This fails to take out this, so this isn't confirmed as a lower high yet, and it does eventually get ran, and then this does take out this. So this is our lower high, and this is where we're at the moment. Yes, if I just change that to blue 1 minute. Yeah, so you can see it's quite a messy correction here, but we were bearish, we switched to bullish, and then back to bearish. And you can see it clear on the 5 minute. So these are our swing points. This is the lower high at the moment, and we're expecting a lower low, right? And we have actually just broke the extreme demand level here, and we've also broken the lower low. So two things can happen. We can just continue dropping, absolutely melting, take this liquidity to the left, which is our expectation anyway. We're expecting this liquidity to be taken, so we can expect this to either just absolutely melt, or we can expect a pullback and form a lower high. So a pullback, lower high, and then go on to make a lower low. Just drag that out. So now the time here, we've started the day, so it's, you know, roughly 7 a.m. UK time, so it's the start of the day. We know our higher time frame intentions. There's loads of liquidity here to be taken. We're expecting that this could potentially be our higher high, so we're expecting the pullback to form the higher low. Our 15-minute intraday trend is bearish. We've switched back here, and we've just broken the most recent structure. So if we want to set ourselves up, just in case we do get this pullback for a lower high to then continue dropping, we can mark out our supply zones, right? We want to be prepared ahead of time, so that when price, or if price, approaches supply, we can be on the lookout for a change of character to then take the short. All right, so let's mark out our 5-minute supply zones. So we've got one here. This is a pretty clear one. It breaks down here, inside bar. We've got another one here, and this actually, we've got equal highs, so a bit of liquidity there, and we've got a supply here. Yeah, and for me, this is the extreme. This is the extreme supply, because this is the actual lower high, right? But this here fails to take out this low. We pull back, we mitigate, pull down, mitigate, and then we break. And from here we break. So this is the absolute extreme supply for me, and it's probably the most attractive looking one, because we have this level of inducement, this liquidity resting above, but also we can look out for these as well. So we also need to be aware that we can just keep dropping. So if we actually, now it's the start of day, so it's around Frankfurt. What time is it? Yeah, 7:30. So yeah, half an hour to London Open. We're in Frankfurt at the minute. And I should point out actually that I don't actually look for breaks of structure. I look for breaks of supply or demand, because for a true demand to be in the market, it should break to the upside. It should break supply, and for a true supply to be in the market, it should break demand, right? So random bits of substructure or just random breaks of structure like this, I'm likely just not going to trade it. But I'll explain that in detail in a minute, basically, and you'll see why, or you'll hopefully see where I'm coming from. So here we've come up, and what you'd normally say is, okay, we've broken structure, right? We've broken to the upside, and then you'd ask, okay, so that's fine, we've broken to the upside, we've had a change of character, what caused it? What caused the break of structure? And then you'd get long on where you think caused it, right? But what I look for is, like I said a minute ago, supply. Breaks of supply or breaks of demand. And for me, you can see here we came down, came up, came down, and then this pushed up, broke up, mitigated, and then pushed back down. So this was demand. This was demand. It then got broke. So this is our supply, right? This is supply. And so for me, it's not a break of structure, it's a break of supply. And then it's a question of, okay, what caused the break of supply? Simple question, right? So what caused it? So it's not this, because this is already broken. We've already broken it. So it's lower than this. And I probably will say it a few times in this video, but there's always shit in wicks. So for me, this is demand. For me, this broke supply. It's nothing down here. There's no supply breaks from here. This wick caused the break for me. And I'm pretty sure, I know FX7 sometimes does change its data. I'm pretty sure this was an inside bar when I checked on Friday. But yeah, whatever. So for me, this just becomes inducement because we broke supply. It's already broken. Level of liquidity to take. You could put your entry here. We've already done the top-down analysis. We've already expecting that we could potentially be pulling back, and if we're not going to pull back, then we'll just be aware of our supply zones. So if we're going to continue dropping now, we've got our supply zones mapped out. 1, 2, 3, liquidity here, and so now we'll just follow price on the 1 minute and see what happens. Okay, so if I just grab this and play price on. Okay, so we have pushed up quite a bit. Not mitigated our supply yet, so there's nothing to worry about in terms of selling pressure. We'll just continue, we can leave our order on. Shooting down, okay. Spikes us in, and a pretty quick reaction. Okay, so look what happened. It had to break structure in order to mitigate our demand. So you can call it a minor break, or I've got temporary break. And then we have this minor supply here. Minor supply, which caused the break, right? But obviously, we're breaking supplies and we are respecting demands. So we're not expecting this to hold. I won't want to sell off this. It's just something that I'm going to be keeping an eye on. Basically, it's my next level of where I expect. Like typically, you'd want a break of structure. For me, I want a break of supply. So if I want in the next break, it's this. This is the supply. So we just continue with price pushing on. Okay, so we've tapped into our supply. Pushed away. So what we could do, we could call this our reaction point, or supply reaction, whatever you want to call it. But obviously we're not looking to, get short. Okay, and then we go on to break the supply, right? So we've broken supply now. And we've still not mitigated our supply, our actual main supply. These are just minor supplies. So we're not looking for sales just yet. We've broken supply, we've respected demands. And yeah, I do just want to mention management as well, because like at the moment we are heavily counter trend. We're heavily bearish on the 15, the 5. We've got all this liquidity below us, like we know. And so we're trying to buy this. And we can't be expecting, huge trade to the upside at the moment. Obviously it can happen, but there's just no need to try and, swing for the fences on these, slightly riskier counter trend pullback plays. Like, take your profits. Like, I know a lot of people in the community take 1 to 5s on every trade, like no matter where it is or what it is, which is great too. Like, bank your profits. But for me, like, just take it at logical areas as well. If you don't want to do 1 to 5s and you don't want to do swing for the fences, take it at logical areas. Like, first supply here, like it's 6.45. Obviously, you don't want to take it really past this one. But 6.45, just take your profits, and if another setup comes, take it, and just keep taking continuations until you're either wrong or you see a supply. We see a reaction at a supply, a change of character, and then you can look to get short. So yeah, there's just no need to swing for the fences on these sort of counter trend moves. And yeah, if you're range bound as well, like, again, set it at the closest demand or the closest supply, depending on which way you're taking it. And with ranges as well, it's a really good way if you want to ping pong. Obviously, it's hard to ping pong if you're just leaving every single trade open. So if you just set TPs in a range and counter trend at the closest supply or demand, you'll be surprised how much profit you can actually bank. And yeah, so if we just carry on now anyway. So like we were saying, we've reacted off this minor supply, we've pulled up, we've broken the supply. Okay, so if we wanted to get in again as a continuation, we've not reacted off the supply yet, we've not reached it. So at the minute, demand is still in control, so we can still keep buying it. So reaction point should have broke down. We failed. This supply has failed. What caused the fail? Again, like I said earlier, there's always shit in wicks. This causes the supply to fail. This is the reaction point. We pull down, and then this causes it to fail. So if we wanted to get in again, let's just rein this in. This can be our inducement. Don't want to be buying it here. You can set an entry here. Go with 1.5 pips. Should be okay. This one was 2. Probably could get away with 1.5 as well. Now we'll be cautious. So spreads and stuff, but this one's a bit of room. So yeah, 1.5 pips. Just rein this back in. And again, so I'll be setting the TP there. So yeah, pretty much 6%. And just play price on. I mean, we can take this buy with confidence because we know demand is in control. We've not hit a supply, like I keep mentioning. We've not reacted off a supply yet, so there's no reason to be fearful setting limits here, even though we are counter trend. Okay, so we get the reaction. We start pulling up. Okay, and again, what do you notice that's similar to this? We've had to break this, minor structure or whatever to the downside in order to mitigate our demand. Okay, so again, this here can be our minor supply, and so this is what we're looking for to break next. So we'll just carry on playing. Just pull that out a little bit. Okay, so we've tapped into it, and there's our reaction. Okay, so I've put a reaction point on there. So exactly the same as this. we've reacted to the supply. So let's see what happens. Let's see if this supply was to play out. I know it's only a minor supply, so I'm not going to sell off it. But if this was to play out, this should take this demand. It should take out this level, yeah? So just play on. And it's completely failed. Completely failed. And we've just, well, you can maybe see you've hit TP, I don't know. Yeah, okay. We've hit TP on both of these trades. So just rein that in. This supply at the same time has actually failed as well, so this just blew through that, so that's irrelevant. So this is now pushed up, broke that supply, broke this minor supply, okay. And if we want to continue buying, which we can because demand's still in control, where would we set our limit? And again, reaction point, this caused the failure, reaction point, this caused the failure. And again, shit in wicks. There's always shit in wicks. So you can just put that as your demand level, bring this back in, and you can set the limit on there. Again, 1.5 pips just should be enough. Just cover your demand level. It shouldn't go lower than this. Obviously it can do, but that's the risk we take. So if we just play price on, we've got our limit on. Let's just pull this across. So again, this is the next supply, right? We count a trend, so I'm still setting TPs at the next supply. And yeah, so it's 5R, if we get tagged, that is. This was our break. Just play price on. Okay, we're tapped into the trade. And we've got the reaction. Okay, so again, what do you notice that's similar to these? Here, we've, broken up, and then we've broken down. So we've had to break down in order to mitigate our demand. So again, we've got this as minor supply, right? So this is the next level we want to break, or look for the reaction. And so I'll just play price on. Okay, so we tap into minor supply, get the reaction, okay, and just absolutely fly through it. Okay, so again, same thing as before. There's our reaction point. We've attempted to come down, and if this minor supply was to be a success, it should take out this demand, right? But we don't. It fails, and what causes the fail? This sell before the buy candle is our order block, which takes out the minor supply. So this is our new demand, right? And we've hit TP on this trade. So now we're in no trades. Let's just rein some of this in. We're in no trades whatsoever, okay? And we've tapped into supply, right? So what we can do is just monitor how we react in this supply level. I wouldn't want to set an alert on a demand whilst we're in a supply, so if I was to set a limit on this, it needs to break this supply. So we'll see how we react. Okay, so we've tapped in, we've pulled down, and we have completely failed again. Okay, so now, again, we've got another demand level here because this is our supply, right? This is our reaction. We could argue this one, but this is the one that actually pulls down, and then we completely broke through it. So we'll just rein that in now. So we've got two demand levels that we could consider for buys. I prefer this one because this is the one that caused the original, for following the mitigations, following the continuations, this is the one that caused the actual minor supply fail and the true supply fail. So this has caused both. See the momentum that's kicked into the market. There's no real structure here. It's more just momentum kicking in. Again, there is a wick though, so I'll just monitor it. And how far away are we? Okay, so we've got this liquidity here and we've got this supply here, so we'll just monitor price. We can, if you want, set a limit here. I prefer this one, but for now, let's just set it on this one for argument's sake. Okay, so we're continuing to the upside. Okay, so we've tapped into our supply. Okay, so like I said before, when we're in a supply, I don't want a limit on a demand. So I'll remove the order for now, and I'll just monitor price. So we've tapped into this supply, and this is our extreme supply, and we've taken the liquidity here. So we can expect, if we are gonna continue on this bearish leg with this lower high, and take out the liquidity that's down below to the left, like I mentioned before, that this would be the level that we get our reversal at, or get our change of character at. So we'll just want to monitor price here, so I'll just carry on playing. Okay, so we have still respected the supply, tapped in. We've not had a change of character yet. We've not had anything really. We've just reacted. So just keep playing along. Okay, so here we've failed to take out the high. So we failed to take out this high, right? So, and we've rejected, pretty impulsively. So we could argue that this is a weak low, or this is a weak low. So if we just put that there, so we've reacted, you can class it as a mitigation. Okay, and so now this is mitigated this, it's respected the high, and we've pushed down, but we've not taken out the low. So you could argue that this is weak. And if you look left, it's basically pretty much equal highs, liquidity build up. So whether it's you class it as equal highs or just a weak high, there's liquidity above and below this area at the minute. Okay, so we get the sweep, not closed above, so this is still weak. It's not taken the high, it's not, not a full body candle close above this high. So this isn't really a low, it's a weak low. So we could just drag this across. This is our sweep of liquidity. Okay, so we're coming down. If you see here, the thing that took out the high, you could argue, is this inside bar here. So we could already say that we've had, a minor break or whatever. But really, you want in, this low to break, before we're looking to get short. So we've had that mitigation. So that would be the aggressive entry if you were really sure, you could get in there. But there's no need to be the first man in, so we'll just carry on with price. Okay, and here we get an actual break. So we get our break. So we've had a change of character now. We wouldn't want to be setting limits on these levels. We'd want to monitor price and see how we react, because we've just switched bearish on the 1 minute. So we want to wait for a change of character if we want to get back long. But this bearish switch on the 1 minute has happened in our extreme supply, so we're actually respecting supplies now. So we're not expecting demand levels to hold when supply is in control. So we've had the change of character, we've taken liquidity here, we've obviously targeted this liquidity, we've taken this, and I'll just delete that. And so you want to trade away from liquidity sweeps, you want to trade away from them, you don't want to trade into them. After you've swept liquidity, you're expecting price to go the opposite way. If you were to sweep a low, like with these, for example, just zoom out. We've just swept this liquidity here, and it's dropped. We're expecting a higher low, right? So we're expecting this to be swept, and then it to go bullish. So you want to trade, you want it to sweep and then trade the opposite direction. So if we see this, if it loads, if we see this in our supply zone, expecting a bearish leg, we want to trade away. We want to sell this now. We're not looking to buy at either of these levels, especially not a limit anyway. We could wait and see how it reacts, but we don't want to be setting limits for sure. So if we were looking to get in the sell here, where would we get in? What caused the break? And again, so the sell before the buy, sorry, the buy before the sell candle. Yeah, again, obviously you could refine it to the wick if you wanted. The small wicks aren't as great. It's when they're big, they're the ones that I like personally, but you can set it on the wick as well. But this order block's fine, so you can just set your limit there. And you can be conservative with the stop, but really just need to cover the supply. So as long as your supply is covered, this is all efficient anyway. There's no, it's no imbalance. There's nothing there. It's all mitigated. And yeah, so you can set your limit here, 1.5 pips, and keep them in mind where our demand levels were, right? So there was two. This is already mitigated. This is mitigated. And this is mitigated. Okay, so what we do have as well, so when we're taking these buys, these are the decisional order blocks, right, or decisional points of interest, whereas there's also, like in a leg, let me just draw it. So we've got a bullish leg, like this is the leg, the pullback, and the leg, right? Our extreme order blocks, or our extreme point of interest, will be right at the low, and then the decisional will be somewhere, above it in the middle, or towards the top, or just in this leg somewhere else. And so if you look here, this is our leg, this is our extreme, and this is our decisional. Again here, this is our leg, this is our extreme, so it's by drawing. This is our decisional. Okay, so I'll just delete that set. Yeah, so basically what I'm saying is these here are actually unmitigated demand levels. So these extremes, so we can actually just delete this, just clear things up. So you've got two levels here, right? The two extremes that are left unmitigated. So we've got these two and these two. These are our demand levels, right? And so if we're looking to get in this sell, and we'll just play price on. So we do tap in. Play around a little bit. Okay, and then while we're in the sell, the only thing we have to worry about is how we react to our demand levels. So, I mean, I like to rein them in a little bit. I don't like having loads of lines all over the chart and stuff, but we've got 4 levels, right? 4 unmitigated demand levels. And all we have to do is see how we react. And so, now that we are aligned, like we've aligned with the 15-minute, 5-minute structure, okay, so we'll just carry on playing price anyway. So just draw this out for now. Draw these two just for a second, and see what happens. So obviously, if you wanted to, you could follow the mitigations. If you missed this trade, you could get in here. It's not really in my plan to do that. Just take a mitigation. Like I said before, I want actual demand breaks, supply breaks, etc. But you could just follow the mitigations. Okay, so we're coming into this first demand, and we've completely disregarded it. Like as predicted, supply is in control. We're not expecting demand levels to hold. And also, so like I was saying before about management, when we counter trend, obviously you take profits at the supply levels, the nearest one, right? But when you're with trend, there's no need to take a TP here. Absolutely no need. You can just monitor price. And like I said before, we're aligned with the higher time frames. We're expecting this bearish leg. We're bearish on the 15. Now we're bearish on the 1 minute. We've got all this liquidity below here. We can even consider this low a weak low, right? Because it's not taking out the high. For this to be a strong low, this should take out this high. This should just shoot up. And at the minute, it's not. And obviously, it still can do. But we've now broken down. We've broken demand levels. We're respecting supply. We've broken demand levels. So this, for me, is a weak low. This it's game over for this low. This low is toast. Just forget it. So there's absolutely no reason whatsoever to be, setting TPs anywhere here. And you can even argue that there's liquidity build up here from the mitigations, but there's absolutely no reason to set a TP anywhere in this leg until at least the low at the bare minimum. And the only thing we can do while we're in the trade, we can just monitor price. Obviously, if we start, the only reason to cut this trade short, the only reason is if we start respecting a demand level. So one of these three, now this one's done. So one of these three levels, if it starts respecting it, we get a change of character or we get a sweep, something like that. Then we can either hedge and play the pullback, or we can completely just close the trade out, or we can take a partial, whatever. But at the minute, this low is done. This low, just forget about it. There's nothing holding this low. So if we just carry on with price, in fact, we can also, if we just zoom out a little bit, here's our liquidity, right? So if I just put a line across, we're expecting this liquidity to be swept, right? So we can just put a line just below, and put a line here. So at minimum, we're expecting to come to here at absolute minimum. Realistically, if we wanted to just hold our trade here, and it's not even ridiculous to hold that far, because this is our higher time frame intention, right? The intention of the market. We're expecting a higher low. We're expecting this liquidity to be swept. So it's not out of the question that we can just hold this single trade to it and let the intentions play out. Obviously, there could be pullbacks along the way, which is why you could set, a take partial at this low, and then a take partial here. But in this, until we get to this low, there's just nothing. There's absolutely no reason to take, to cut your trade short, basically. So we'll carry on with price anyway. We'll see how we react to demand levels. So here's another one. Okay, so we've actually had a reaction here. You can put your reaction point on. Obviously, I'm not looking to trade it until we have a change of character. So we're pulling up. Okay, and the demand fails, right? The demand fails. And it's the same question as earlier. What causes the demand to fail? So if this demand was to be a success, this reaction should take out supply. It should take out supply. And it's not, it's completely failed, it's followed through. So then the question is, what causes the fail, right? And again, wicks. So obviously it's up to you whether you want to use the wick or you could use the inside bar. Don't really matter. But just this level, right? This causes the fail. And there's nothing else here. The demand level's down here. So in this level, there's nothing. We're just in no man's land. We're bearish. So why not jump in on the continuation to get a scaling? Again, just cover the high. And so as well, I know a lot of people in the community did get in probably most of these trades, or at least a few of them, and this is where it comes down to perspective as well, because I know a lot of people trade or take the same trades, but it can be for different reasons. Like some people might just take, when we're bearish, say on the 5 minute, they'll take every single 1 minute, mitigation, a bit more aggressive. Like they'll take this, or just consider this as, just a lower low, lower high mitigation, just enter on each one, right? But it's funny how they line up with demand reactions, supply reactions. So we had a supply reaction, break, and this one, demand reaction, break, what causes the break, right? So we're setting limits on the same trades, but it can be for different reasons, and this is where it's interesting, hearing different viewpoints on it. I think, I'm not 100% sure, but I think Sketchy also uses this theory. I'll have to confirm that with him, but yeah, anyway. So this limit's on now, basically. We're happy to set this limit. There's no reason to set a limit up here. Obviously, you could argue that this broke this demand, right? But we didn't get the reaction. We got the reaction off this demand, and then it broke. And what caused that? This. So we'll see how we go. Okay, so we push down a little bit. Okay, so some people might want to enter here. That's fine. They want to follow the mitigations, but for me, it's not something I'd want to get in. I'd probably just consider this, inducement, because this is our level. Okay, so you could get in here. This would be the mitigation. Okay, and you do push away. So once you see that it's failed to break this low, if you were in this trade and it's failed to break this low, this then becomes weak. So this is a weak high. If this is failing to break this low, this high is getting ran. So if you're in this short here, like just set your break even, set your your stop to break even. Just protect your capital, because once you see that reaction there respecting this low, I mean, obviously it could still just come up a bit higher and then take it out, but if you see a reaction and push away, like, just protect your capital. So let's just carry on. So for me, even before this was just inducement for me, because my entry is here. This is where the demand was broken. And so yeah, this does get swept. So hopefully if you were in this, you took a break even. Okay, and then you get you tap in and you push away. We'll just play price on. Okay, and as well as before, notice how we had to, we had to break up to eventually break back. Right, so you could argue that this was a minor demand. Like, this was minor supply earlier. This is minor demand, so we've broken that. What caused the break? This. So you could have this as your supply. And we'll just follow. Sorry, 1 second. Yeah, so you can put your limit on there if you want, and jump in another continuation, because at the minute there's no reason to get out, like I mentioned earlier. So we might as well just ride the train, right? Just keep jumping in until we see something to tell us otherwise. Just keep selling. So just bring these out. Okay, so we've actually tapped into this demand here, this extreme, and we've reacted. So you can put your reaction point on. You can leave this on. sorry, no, you can't leave this on. You can take this off, sorry, because now we're in a demand. I don't want a limit on a supply. Like earlier, when this tapped into this supply, I didn't want the limit on the demand. So it's the same way, just the other way around. So I've taken that limit off, and we'll just see what happens here. So we've reacted to this demand at the moment. Okay, and then we failed, right? So what caused the fail? We've not tapped into this demand yet. So we're not in a demand, so we can set a limit on a supply. So this inside bar causes the failure of this demand. This is the reaction point, supposed to take out supply. Doesn't, it fails, follows through. So here, same as earlier, here's our entry. Probably go 2 pips on that one, to be honest. Okay, so we've tapped into this demand now, so yeah, this order gets removed. Just look at price. Okay, it's actually, is it failed? Okay, it's definitely failed now. So it has failed, so we can put that order back on. Literally the same place. That's the reaction. Still not mitigated this one. You can set the order there. I know we are close to the low, so we can also think about what we're going to do when we get there in terms of management. So we can either, like I mentioned before, we can take a partial, or we can set a partial here and a partial here, or we can just close the trade here if you wanted to, if you wanted to just, just bank your profits. And of course, if you really wanted to let the intention of the higher time frames play out, like we know we're expecting a higher low somewhere in here, so what we could do, we could look for, relevant demand levels that could give us that higher low that would be underneath the liquidity. So if we just drag this out 1 second. So if we just put on our, so this was supply, this was supply. Okay, so we'll just draw this across. So we had a break there, and we had a break there, right? So yeah, it's pretty clear on the 1 hour actually. Let's go to the 1 hour. Where are we? Okay, yeah, so you can see here, so we've broken supply, and if you just see here as well, we've broken up, broken down. So this is also a supply, so exactly the same concept as before on the 1 minute. And then we've tapped in here, so this can be the reaction point, and we've pulled down. The supply has then failed, it's pulled down, not broke the low, it's broken to the upside, so it's a failed supply. And then simple question, same as before on the 1 minute, what causes the fail? And again, stuff in wicks, we've come down and then pushed up from here. So from this wick, we've pushed up. So if I just put this demand level on and extend it, so this is relevant demand, right? This has already mitigated this, and from here we've broken 3 levels of supply. So if I just go back down to the 1 minute, okay, so yeah, again, for me, I'm taking 50% here and 50% here. If you just notice now as well, we're not in any demand, so there's nothing to worry about in terms of, getting long here. We've broken all the demands. If it does break this supply, we've got to change a character. We can start looking at a potential fail on this, then a fail of breaking this low, which then would make this weak, and something's changed, right? But at the minute, we've broken all the demands, and we're not really anywhere at the minute. I know we've not broken the low yet, so supply is still in control. So still confident in taking continuations to the downside. So we tap in, start impulsing down. We've hit our first target at the low, and it's moving down really impulsively, but it's no surprise because the amount of liquidity on the higher time frame was to be swept. It's going to want to take that, right? And there we go. Hit our second TP, and if we just want to follow it down and see what happens. So obviously there was still some on the table, but we're not going to get every single pip. So we tap into that demand level, and we absolutely rock it to the upside. And so you can see the power of like letting the higher time frame intentions play out, because this is just one day. This is around 7:30 just gone in the morning of UK time, and it hit our second TP, about 1 a.m. almost. So within the one day, you've got 6.5, 6, 5, 17.5, 26, 22, and 11. So what's that, like 76 and 76, 77, something like that, 75. All in one day, right? So just knowing when to set your take profits and when to hold and let your higher time frame intentions play out can be a huge difference, because obviously you can take 5-hour trades and you still have an absolutely fantastic day, but at the same time you could be potentially cutting yourself short. So yeah, it's just down to like personality really, how you want to trade, how you want to manage, whether you want to be brave enough to just follow the market, follow the demands, see how we react in these demand levels, just hold full volume until this low. I mean, it might seem crazy to some people holding full volume at 16R and you've not taken anything, but if you know, or can't always know for certain, but if you have a really good idea of the higher time frame intentions, you know it's taking this liquidity, you know it wants to set up a new higher low, then why not, And now, like with this reaction here, like I was mentioning earlier about swing points, like how strong and how impulsive they move away, and this is just obviously, these are strong, and then this is just sideways, and then we've got a strong move down, and then look at this reaction here. We've swept all this liquidity, and that is an absolutely really good. That's a really good reaction. So obviously already going into this new week, we know that we can expect potential, new highs, because if I just zoom out again, go to the 4 hour, just get rid of all this. Okay, it's a bit of a mess, but we've got the higher high, higher low, higher high. Now a higher high again, and this is looking really likely to be a higher low. It's swept liquidity, it's mitigated our demand, so we can expect a new high. In terms of like expectational order flow, you'd expect a new high, right? And it would like coincide with wanting to take this high as well for the daily expectational order flow. Obviously I don't want to over predict what's going to happen, because obviously you could class this as a break here, and so now we could be coming up, forming a lower high, and then starting a bearish trend or whatever. But as things stand, if I was to go out on a limb, I'd say we're likely to put in new highs, but obviously just trade and see what comes and react to the markets. So yeah, I think I'll stop it there, guys. Like, I've rambled on for ages. It's meant to be a pretty small video. It's gone on for like an hour. I think the audio is pretty bad as well, because I'm just using basic headphones, so I'm sorry for that. And I hope you do enjoy it. And if you have any questions, just message me in the Discord or whatever. And yeah, leave me some feedback, because see if you want any more videos, or yeah. All right, guys. We'll talk soon. Bye.